Well, howdy there, folks. Got a good video put together for you guys here today. We're going to talk about the markets. I'm going to share a ton of different stocks that I feel like are, let's call them steal deals right now in this market. We're going to talk about what's transpiring, and we're also going to get into, I think, a really important kind of psychological point I want to make at the end of this video here today, because a lot of folks are getting fatigued by this sort of market. They're getting tired. They're like, oh, man, when do stocks stop going down? When do they start going up? And I think that's an important thing we're going to talk about for you know, the mentality of investors out there in this sort of market. So yeah, hope you guys enjoy this as always. Appreciate you guys joining me in this video. So Dow down pretty big today, not huge, more like Nasdaq's down big, 2+% there. Russell down about 2% here today. Bitcoin's getting tore up today, 6.5% there, 7.3% down for Ethereum. You know, seeing Bitcoin down like that, just in terms of that, because some folks are wondering, like, why does that happen with Bitcoin? Bitcoin's very much a risk-on, risk-off asset. So meaning essentially, if folks want to take risk, they're going to buy Bitcoin, right? If they don't want to take risk, they're going to sell Bitcoin. That's what Bitcoin has really become for the financial markets. And so, you know, naturally, if everything's selling off, Bitcoin's going to sell off as well. Now, you had that huge kind of influx of likely Russian money into Bitcoin. That was about a week ago or so, but that's kind of fallen out now. If we pull up the watch list, it's ugly out there. It's so bad, okay? I mean, Oatly down 7.8%, Beyond Meat down 7.7%, GoodRx, another huge downward move for GoodRx, down 7.7%. Corsair, are you kidding me? Corsair, CRSR down 7%. That one's surprising to me. I just can tell you that much. 7% down there. Square down 7%. Purple, the mattress company, bedding company, down 7%. Shopify down 7%. Look at that, Shopify at $5.95. We might talk about that one a little later in this video. SoFi down to $10 here today. I believe it was under $10 at one point. Nordstrom down 6% here today. Uber at 29. Uber's under $30. Yes, Uber de Booba stock is under $30 now. Stitch Fix has hit a 10. That's incredible. I mean, incredible. For Stitch Fix to hit a 10 is just ridiculous. That's all I can say about that. Down another 5.8%. Revolve down 5.5%. Celsius Holdings, which basically owns Celsius Beverage, if you might know of those products, very, very popular, down 5.4% here today, getting close to a 52-week low. Honest down 5.3% down. That is a 52-week low. Wynn hit $81 here today. Wynn's looking interesting. That one we're not going to talk about Wynn today, but I will say Wynn's actually looking really, really intriguing right now. Foot Locker 29, Sam 373 down about 4% there. Voyager hit 6 today. Are you kidding me? Voyager, I mean, you're talking about, this is one of the, you know, top 50 apps. Usually they've been actually reporting profitable quarters. The growth is ridiculous at Voyager, but man, in this sort of market, you just can't catch a break. Like, literally, these stocks just can't catch a break. It don't matter what right now. Voyager hit 6. It's just silly. Lemonade's under $20 now. Palantir's down to the 10s. The 10s for Palantir. You got to be flipping my flapjacks, okay? That's all I got to say about that. Maxar Technologies, this one finally faded. Maxar's been a hot stock because basically what's going on is their technology, their satellite imaging technology is being basically advertised all over the world right now because their images of the Russia-Ukraine situation are being put everywhere out there. And so Maxar is almost overnight becoming a very well-known company, and a lot of traders are playing it because of that. Teladoc, 66 here today for Teladoc. Chef down 3%. Fubo, 731. Is this one going to hit a 6? My gosh. Robinhood, the hood's down to 11. Avant Brands doing a normal thing. Look at Amazing's on 2,900. I think that hit 2,800 range today. Meta under 200, looking like a snack and a full course meal. PayPal under 100. Come on. Quit playing with me. Stock market. Under 100 for PayPal. You got to be flipping my flapjacks. Baba's flirting with going under 100 as well there, right? Now, in terms of everybody's wondering, like, why is the market getting hit so heavy? So one is right now, there's two things, okay? Two reasons why the market went down so much today. One is, I didn't prep a slide for this, but essentially you're in a you know, with the Russia-Ukraine situation, you never know what dramatic bad news can come out over the weekend. So a lot of retail, most of retail, not retail, Wall Street, most of Wall Street thinks very short term. They think about the next 3 to 6 months. They can even think that they might even be thinking about the next week, right? And so the way they think about it is there could be a bunch of bad news that comes out of the weekend. So you know what? Let me go ahead, cash out. I'll buy back in Monday. They look at it and like, what great news is going to come out over the weekend? Probably, the chance of great news coming out over the weekend, low in this sort of market right now where, basically you have all this bad news, you have the Russia-Ukraine situation, the probabilities of some more bad news coming out are fairly high in this sort of market, right? And so a lot of Wall Street's just like, you know what? I'll cash out over the weekend and I'll come back in the market Monday, Tuesday. Oil. This is the second reason why this market's down huge is oil's going so high now that a lot of Wall Street's looking at this and they think oil could cause two scenarios to play out. The first scenario is a global recession because the world is still so dependent even nowadays on oil. And as much progress as we made toward EVs and solar and wind power and all those sorts of things, you got to understand, with that progress being made, still the world is extremely dependent upon oil. And so with oil going crazy, a lot of folks say, you know what? That's just going to create a scenario here where we could push into a recession because the world's still so dependent upon oil, right? Second thing Wall Street thinks about is with oil going up that much could cause a lot of companies to miss earnings, right? And so nonetheless, it's just a bad scenario across the board. When energy prices are going up like that, Wall Street's going to look at that as a potential recession scenario, or companies will miss earnings because oil's going so insane, right? Now, let's start out with a lot of these large cap stocks that are looking like a deal steal right now. It's like stealing money. Meta, stealing money right now. Anytime Meta goes under 200, stealing money, okay? If we go back to the crash of December 2018, it was a major bear market the market went into there, and a correction scenario where the indexes all went down pretty much around 20% plus. So at that time, Meta fell to $124, $125. Now think about where Meta's company's at today versus where it was at then. They have way more users, they have way more revenue, way more net income, way more, everything's better at the company, better balance sheet, better growth prospects, everything across the board's better for Meta now than it was back then, right? But right now, that stock's getting hit heavy, and it's under $200 here today. If we go back to March of 2020, the stock was in the 140s, 150s. So yeah, you can get Meta under 200. It's usually a deal steal, and that's exactly what it is here today when it comes to that one. The iOS changes have obviously hurt that, but they'll figure out ways around that. Trust me on that. Okay, Amazon's a deal steal. Anytime the stock's under 3K, it's a deal steal. And right now it's under 2,900. So if we go back to July 6th of 2020, the stock was $3,200. So it's over $300 cheaper today than it was back in July of 2020, right? When it comes to Amazon, yes, they have tough comps to comp against for the next quarter, but that slowly moves off. And, at the end of the day, you just got to think about these things, right? It's like if you're buying a stock like Amazon, you better be buying on a long-term basis, right? A long-term basis. Like planning on holding that stock for the next 2, 3, 4, 5, 6, 7 years, right? And think about it. Like everybody's so afraid because they're like, oh, this next quarter is going to be a tough comp. Who cares? Like literally, who cares? When it comes to a stock like Amazon, it doesn't even matter in the end. Whether you get the stock at 2,700, 2,800, 2,900, 3K. It's all just, it's all just for fun at the end of the day, right? Because Amazon's like this stock that's going to 4K, 5K, 6K over the coming years, based upon where their net income is going to trend over the next 3 to 5 years, based upon where their revenue is going over the next 3 to 5 years and the growth prospects of their company. And so, Amazon, it's a deal steal. It's like stealing money anytime it goes under 3K right now, okay? So yeah, Amazon, extremely attractive. Tesla. So, I get some question about Tesla from time to time. Obviously, I'm a shareholder of this company. I have, multi six figures invested in Tesla. I think this one's getting intriguing. I don't think it's as much of a steal deal as some of these other stocks because it trades at a much richer valuation. So it's priced in a lot more growth. But I got to say, Tesla can get really, really intriguing, especially if this market continues to drop, and it hits the 700s, 600s, dare I say 500s if that was to happen, right? I think this one is ultimately a pretty good deal steal. They're in the driver's seat, no pun intended, when it comes to EVs and when it comes to autonomous driving technology. And, those are such big industries that Tesla could easily grow into a multi-trillion-dollar market cap, believe it or not. I always thought Tesla could grow into a $500 billion to $1 trillion type market cap. But the more I've seen that company make this incredible progress over time and just continue to destroy it, the more I'm convinced that Tesla is one of those companies that just is just a beast. Now, I said this last year, around January, February. I said Tesla was going to go through a 1 to 2 year chill out period, and that's exactly what's happening. And I think that's going to continue to play out where Tesla's going to go up, down, and kind of not really do much. It was going to make some moves up. It's going to make some move down. But that's just what Tesla's going to be doing for at least the next another 3 to 12 months of this kind of playing out of this, let's call it chill out period for Tesla. It goes through those from time to time, and all the big companies go through those time periods. Look at Amazon. Amazon, is going to be on almost a 2-year chill out period, right? If we come upon this summer and Amazon still isn't over 3,200, then basically it's just been in a chill out period for 2 years. And that's amazing company. That's amazing on at the end of the day, right? FB is in a chill out period right now, or more like a crash period for there. So these stocks go through that. It doesn't mean they're bad companies. It's just that's natural, and that's what happens in the market sometimes. Even the best companies can go through a 1 year, 2 year, 3 year chill out period where not much happens with the stock price. It actually even downtrends over that time, right? Netflix. I never thought I would say Netflix actually looks intriguing, but Netflix actually looks pretty darn intriguing now. It's amazing. That's all I can say about that. It's nothing short of amazing, okay? Netflix. So March 30th of 2020, the stock was $361, right? Here today is $360. The P ratios have even gotten intriguing on Netflix. And like I said, I never thought I would say Netflix actually looks like a value, but Netflix actually looks like a value. And that's where, you'll get into an undervalued market when you could say Netflix looks undervalued based upon what their future growth is. That's when you know you are in a down market. Let's just put it that way, because that's not normal for me to come out and say Netflix looks like a value. Jeez, that's something else, okay? But it's a value. Oobity booba stock. So another large cap company. This one's a $58 billion market cap here today. Obviously, Uber's going to benefit massively over the next several years for basically the world getting back to normal. This is a huge deal for Uber, okay? And if you want to talk about a company that its comps are actually really easy to beat and destroy, it's Uber. Their comps they're gonna kill it over this next year. Their comps quarter after quarter after quarter, they're just gonna tear it up. Most of those big Silicon Valley companies in San Francisco are all going back to work over this spring. And so, look for Uber. And remember, Uber is one that thrives in the big metro regions. And a lot of those markets have been, have been basically work from home. And a lot of people haven't been needing to drive around as much. And think about New York City. Think about Los Angeles. Think about San Francisco. Think about Seattle. All these major companies that have tons of workers are all going back to normal. And so Uber's business is going to thrive on the back of that. Obviously, oil prices going up hurts the drivers of Uber, but ultimately they'll just end up raising price more than likely, and Uber will probably end up making money more at the end of the day for that. So Uber, they're actually in a really good spot over the next 1 to 2 years. That's where, this is like, Uber's in a great spot over the long term, but they're also in a great spot over the next 1 to 2 years because these easy comps are going to comp against, and they're going to tear the numbers up as life continues to get back to normal over, the next 6 to 12 months. So Uber's in a really good spot. Actually, that one's a snack now. PayPal under 100. Come on. Do I even need to talk about this one? Like, that's just ridiculous. If you go back to March 30th, 2020, the stock was $92, even in that crash, right? And here today, it's $99. It's under $100. A PE ratio, forward PE ratio, price of sales, all trading at historic lows for PayPal. And this is just a great growth company. It's going to continue to grow year in and year out. And, they own two of the most popular financial related apps in the entire world in PayPal and Venmo. They're just going to their revenue is going to continue to skyrocket over the coming years, and net income as well. The amount of people that use their services is going to continue to go up, and their business is just going to continue to expand year after year after year. And the stock's trading at valuation metrics at all at historic lows right now. So PayPal, it's curry from an open 3 right now. It's easy money, okay? Fintech. So I got a Fintech watch list here. And just interesting seeing the devastation in the fintech space, and these stocks just continue to hit either 52-week lows or all-time lows. Voyager Digital at 6, I already talked about that one. That one's just ridiculous. It's hard to even fathom how low these stocks have gone. SoFi hit under $10 here today. SoFi, I got to do more digging on this one. I think the market cap's around $7 billion or something now. I do more digging on SoFi. A lot of people are telling me research this one. So I'm going to dig into SoFi, see what happens there. I'm going to even do a whole dedicated video to SoFi if I see enough demand for it. Let me know in the comments section if you'd like a full in-depth look video at SoFi, because I know there's a lot of people that really, have mentioned that. So I could do something like that. I haven't done one of those big in-depth videos on a new stock in a while. Hood's under 11. I don't like the hood, obviously. I never have. But I got to say, man, with this stock getting that devastated, I think they got really tough comps the next 2 quarters. But after that, if the stock still remains to be down, oh man, as crazy as it sounds, I might have to consider it. Affirm's down to $35 now. That's never been one I liked. But, if that one keeps going down, I don't know, man. PayPal, the thing I like about PayPal is it kind of gives me the best of a lot of these worlds. Pay now, or buy now, pay later. You obviously get that, which is kind of an Affirm business. You obviously get their B2B business. You get their B2C business. You get even their peer-to-peer transactions business. So I think PayPal, you kind of get, that's why I love PayPal stock the most. And that's why that's the stock I'm buying right now, because you get a lot of what these companies provide, you get most of that in PayPal. I mean, heck, you can even buy crypto. You know what I mean? So it's a kind of a beautiful thing through PayPal. I do love Voyager, though. I got to say that. Square's a great value right now, down 6-7% right now. Coin just continues to get devastated, down about 7% for, that's the biggest player in the crypto market. It's incredible the way that one's fallen. I got an Airlines watch list. This is interesting. Obviously, the airlines are about to tear it up over the next couple of years when it comes to their top line revenue. Now, bottom line's a different situation because oil prices are going so high, right? And so, fuel costs is going to go up massively for the airlines. Now, some of that can be hedged, some of it can't. We'll have to see. But I think the bottom lines for these companies could be messy, even as the top line increases rapidly. But at the end of the day, with world getting back to normal, with mask mandates going away, right? With Rona moving to the backdrop, this is a great thing for the airlines. So companies like AAL, Hawaiian Airlines, Delta, Love, Alaskan Airlines, those companies are going to be in a good spot and a bad spot. As long as these fuel costs are going to be super high, that's kind of puts them in a bad spot for their bottom line. But the top line revenue numbers should be very, very strong for these companies over the next couple of years. And their comps are so easy to beat, it's not even funny, okay? Boeing's getting interesting again. $180 on Boeing now. So, not my favorite stock in the world, but if you're looking for a consistent company that actually has a pretty exciting next few years in front of it, I think Boeing is a pretty interesting play there. Cruise stocks. Royal Caribbean's fallen quite dramatically. Norwegian Cruise Line, CCL's down to $17. CCL at 17. Okay. Not my cup of tea, but I got to say, it's hard for me not to see those ones being moneymakers. The fuel costs will eat up a lot of the bottom line right now. But for those companies in the short term, actually the biggest thing is just getting more customers and those revenues getting back in the right direction. So the investor basis can say, okay, these companies are starting to truly get back to normal. That's the biggest thing for these companies in 22, and that's what will excite shareholders and make shareholders come on to these sorts of stocks. Now, if simultaneously, as the business starts to increase over the next 3-6 months as far as revenue, and then you could start having fuel costs maybe start to come down, and this crazy upward trend of gasoline moderate or even start to come down, let's say, in a few months from now, that would be just kind of a next bullish thing for these companies in general. So, yeah, don't get too caught up into the short-term fuel costs with a lot of these companies because, believe me, that goes away rather quickly. It's like you get these massive spikes and then, what ends up happening is there's so much money to be made in oil and fracking and things like that, right? A lot of these wells that have been shut down will end up starting to produce again. And believe me, wherever there's a lot of money, people are going to flow there, right? And so if oil is over $100, guess what every single person that knows how to frack oil is doing right now? They're like, let's get wells up and running. And they're going to try to get it done as fast as possible. They'll restart wells they had shut down. They'll do whatever it takes to get, basically the oil wells flowing again. And that will ultimately put pressure on oil starting in a few months from now as they start to get those online again. And next thing you know, you'll have market share battles between the Middle East and the U.S. And you'll have all that situation play out again, okay? And so there's a lot of, and if you're thinking about it, right, I know the pushback there could be, well, you got Dems in office. Maybe they're not going to allow fracking or something like that. Believe me, there's going to be so much political pressure on them from these high oil prices that they will do whatever it takes right now to let anybody frack whatever they got to frack right now. Believe me, maybe in a couple of years it's a different scenario, but the amount of pressure they're going to have on them because these skyrocketing oil prices, because they will all be voted out of office. That's a flat out honest truth. They will all be voted out of office if oil prices remain to continue to go up and people have to pay $4, $5, $6 a gallon. It'll be like, hit the road, it'll be like, bye-bye. And so they're going to do whatever it takes to try to get the oil prices down. And if they don't, then they're out of office. So, that's what will end up playing out there. Okay. Now, honest company, just talking about more stocks that are just steals. Honest Company is the best risk reward for the next 36 months, and I stand by that. This is the best risk reward in the stock market I can find. I look at hundreds of stocks on a weekly basis. I cannot find a better risk reward play for the next 36 months in this stock. I think there's a less than a 1% probability this stock will be down 36 months from now, and I think there's about a 90% probability the stock will be at least double the price 36 months from now, and probably triple or quadruple the price, 36 months from now. So Honest is the best risk reward in the stock market I could possibly find right now, under a $500 million market cap on this one. Price to sales ratio is a joke compared to their peers. There's a revenue story, a market share stealing story, and also a net income story and a margin story over the coming year. So Honest, oh man, that one's, I literally can't find a better risk reward. There's a lot of stocks that are like stealing money right now, but I can't find a better risk reward than Honest, regardless of whatever happens out there right now, okay? That's why I went ahead and bought some more shares here today. I'm trying to keep some capital around, basically, because I still got to wait for several of my small caps to report numbers. But Honest, I had to buy another 1,111 shares of that stock here today. I mean, it's just, it's just silly. That's all I'll say about this. The stock is just silly value right now, right? Shopify hit the 500s here today. 500s for Shopify. If you look at the stock prior to Rona, so February 17th of 2020, the stock was 520. So outside of the 2020 crash, this is the first time the stock has hit 500s range since then, essentially. And I got to say, Shopify, the tough thing with Shopify is the metrics still look rich for Shopify, right? They do. I mean, $77 billion market cap roughly today. It's at like a 240 forward P. It's at like a 17 price to sales. And so that's the toughest part with Shopify, is the financial metrics still look rich for Shopify. I should say the financial metric, the valuation metrics still look rich for Shopify. The other problem with Shopify is basically what has happened is, with the iOS changes, it's hurt Facebook advertising, it's hurt Instagram advertising, right? And we know that. We've seen that in the meta numbers, right? But a lot of the Shopify stores counted on using, guess what? Facebook and Instagram for marketing. And so in the short term, a company like Shopify is absolutely hurt, and their comps will be hurt year over year. And so that's the tough part with Shopify, is they got this negative headwinds in front of them, and they still have rich valuation metrics. That's the toughest part of Shopify. So although this is one of those stocks that you're looking at and it's like this is the next one up to be a multi-$100 billion market cap, or even $1 trillion market cap over the next 10 years. And although it has that sort of opportunity, in the short term, it's one of those stocks that it's like, could this one fall another 50%? It's a possibility, and it's not a for sure it's going to happen, but it's not all around a possibility to imagine, as crazy as it sounds, for it to fall another 50%. That's the toughest thing with the stock like Shop, right? It's just in the chop shop right now, just getting it tore up. You look at ARK ETF, ARKK. ARK ETF is just getting obliterated still. I mean, this one, if you go back to before Rona, this one was at $58 a CTF. It's at 60 here today. And, I will say, when it comes to ARK, if I wasn't an individual stock picker, I might be tempted to buy ARK here today, as crazy as it sounds. And, obviously I'm an individual stock picker, so ARK doesn't really interest me, because I'm going to pick the best stocks. And the way I even look at ARK is I say to folks sometimes, I'm like, some of my friends or whatever, they'll say, hey, what about buying ARK? I'll tell them, well, why buy ARK when you could just pick out the 3 of the 5 best stocks you in your opinion that ARK holds, right? Go to kathywoodstocks.com, my website. Tracks ARK's top 25 positions in their main fund on a daily basis. Why not just look at that and say, I like this stock, this stock, this stock, this stock. And instead of, let's say, they were going to put $10,000 in ARK, why not just put $2,000 in each of the favorite 5 stocks of ARK? So I think that's some food for thought there. But I will say, if I was an individual stock picker, I'd even be tempted to buy ARK here. It's just fallen so dang much, okay? Now, if we look at the lows here, market's obviously been tore up. The SPY, S&P 500 is now in correction officially. QQQ, IWM, they're out of technically bear market territory, but they're obviously in massive correction mode. They're 17.5% off, all-time highs. IWM, which is Russell 2000s, 18.7% off of all-time highs. So those have just gotten absolutely decimated. Now, the only reason these haven't fallen more, and I'm talking about QQQ, I'm talking about the SPY, and I'm talking about Dow, is basically because of Apple and Microsoft. Those stocks have really held this market together. But I thought it was interesting. I saw a little bit of Fast Money yesterday. And what was the number one subject they were talking about on Fast Money yesterday? Is Apple overvalued? That was a number one subject they were talking about on Fast Money. And so that makes you think, if this is on fast money, then this is like a thought that's starting to go through Wall Street's head. And could this be the final pillar to fall? We've all been waiting for it. We're like, when is Apple and Microsoft? It just felt like it's just a ticking time bomb where it's like, when are these going to finally fall? Because almost everything else in the whole stock market has fallen. And everybody's just like, when are these guys going to finally fall? And Apple got through that last quarter because their numbers were so insanely great, but they got another tough comp to comp against this Q1. And is this the one they finally don't have that amazing quarter and it lets people down and the stock falls to 150, 140 and it pulls down the entire indexes and it's the final pillar to fall, right? So we'll have to see. But that's what's going on there, okay? Now, in this market, we're in a very fatigued market. And I thought, let's go ahead and watch this video. This is my favorite video on YouTube. You're about to watch my favorite video on all of YouTube, in the history of YouTube. This is my favorite video, okay? And it's intriguing because this is a lot what investors are feeling in this sort of market right now. This is what investors are feeling in this market, right? If you've never been a sprinter, you don't even know this pain.
Shoulders down. That's it.
Dying. I think a lot of people they see you run and they say, oh, it looks so easy, you really look effortless. But before it gets to that point, it's hard. It's like hard work. Day in, day out, sacrifice, day in, day out. Just dying. This time when you run and you just want to stop, you just want to give up, like, to hell with this, I just want to go home. This day when you get up and you know what you have a training today, you know it's going to be intense and you're like, oh, God. I don't want to go today, but you got to go. And it's so hard, and a lot of people don't know.
That reminds me of the market right now. A lot of times people, see investors making money and they think it's like it's an easy thing. And what they forget is you got to go through these bear markets. You got to go through these corrections. You got to go through stock market crashes to get to that good part, right? Where you can win the gold medal. But in order to get there, you have to go through this, these tough times where your stocks are just going down, your accounts are red, and you're like, oh my gosh, when does this end? And you're just like, you sometimes you think like, maybe I'll just give up. Maybe I'll just sell out all my stocks. Like, it's stressful. I'm just fatigued. And that's the way, especially a lot of investors that are newer to the market, I think that's the way a lot of them feel in this sort of just downtrending, vicious market, just getting tore up, right?
My coach always says, in a couple of years, we're not going to have any trap because we're going to take all of it home.
We are not used to seeing you suffering.
That's why you guys are here. Show the true story, innit?
This here is the reality? Do you mean that the competition is not the reality?
Listen, the work is behind the scenes. Competition is the easy part. Behind the scenes is where the work is done. Everything is done to get to that one race that you need to run.
I think I saw him.
In this sort of market, it's all about, putting in the work, listening to conference calls, buying the dip, and continue to, buy stocks when they're down, right? And, to get to that good day when you're finally making money and you're like, oh my gosh, I just made 10% in the stock. Oh, I made 20%. Oh, I made 50%. Oh, I made 100%. Oh, I made 200%, right? You have to go through a lot of crap just to finally get to that moment, right? And people don't realize that, especially if they're not a stock picker. They don't get that, right? They think it's just like, you just make all this money and it's just beautiful, right? And they don't realize the time periods you have to go through in order to get to that moment where, your accounts are down and stocks are down and you're like, oh my gosh, I'm down 20% on the stock. I'm down 30% on the stock. What am I doing here? And your accounts just continue to get devastated day after day and you buy the dip and you're like, and now it just went down more and you're like, oh my gosh, like when does this end, right? And people don't really get that. They don't understand that from a long-term perspective. They just see the success. And And you think, oh my gosh, it's so easy, right? And it's like me with Tesla stock, right? It was pretty much like a life-changing stock for me, right? It just made my wealth go crazy. And that one, I had to go through a lot of crap with Tesla. That stock did nothing for the first, year, if not over a year since I had been in that stock when I first started buying it, right? And, it downtrended. It didn't go anywhere. There was a lot of drama, a lot of huge dips. And I can tell you that's the way it was with a lot of stocks. And just over the 14 years I've been in the market, I've been through several crashes. I've been through several corrections and times where the market went into bear market and it was down 20% plus. And, this type of crap you got to go through to get to all those gains and all that money to be made. It's part of the process.
Training, how I felt it that day. He was vomiting and he looked stressed, and I really felt it and said, son, I didn't know you got to work so hard, because that was some hard training. So I prefer not to be there because it's not easy to watch him train, because it's really tough.
You saying you all right?
Yeah, coach.
See your conscience speaking. Don't do it. Stop running. Retire. Go play football. Go play golf.
Oh man, that's too much. But that's just a good, I think, kind of video in this sort of market, because a lot of people just get very fatigued. They just think about giving up. They're like, when does it end? And they just start kind of looking for a way out of the market in this sort of market. And ultimately, every single time you get corrections, bear markets, crashes, whatever, huge buying opportunity. And I know it's not fun to go through. And I think the worst part is, especially if you're a newer investor, let's say you've only been investing for a year. All you've seen is stocks downtrend for the most part, right? A lot of the hype stocks peaked out in January of 2021, and they just have gone down since then. And so you've just kind of seen stocks just going down and down and down, and you're like, if that's your whole investing career and that's all you've seen is just devastation in stocks constantly across the board, you have, that's all you have to go off of, right? For somebody like myself that's been doing this for such a long time, like, it's nothing to me. It's just another one we're going through, and then we'll be out and I'll make a ton of money, and then it's going to be like, oh my gosh, look at this stock, oh my gosh, Jeremy's making so much money. But you have to go through these time periods, and I think a lot of people, they get extra frustrated because they try to put like time frames on it. So they're like, I think, the market's going to bottom here and then we're going to be up, and then it doesn't happen, and it hurts even more to those folks because they try to put a time frame on it, and if it doesn't play out that way, they're really hurt, because of that, essentially. So you just got to keep your head in that market. You got to understand it's part of the process. Just like you're not going to win the 100 meter, the 200 meter in the Olympics unless you understand you're going to have to do some freaking training that's going to be vicious, and you're going to be throwing up, and you're going to feel like you're about to die, literally. Anybody's ever done real sprint training, you feel like you're about to die, like if you've ever really pushed your body there, right? And that's just part of the process. And when you're in the stock market and you're doing this thing, you want to get all that money, you want to make all that money, you want to build to 6 figures, 7 figures, 8 figures in the market, you got to go through these time periods where you're just going to get absolutely trashed, and you're going to buy and you might get trashed more, and you're going to buy and you might get trashed more. And it's all part of the process. And you have to be willing to accept it. And if you can't accept that, you're never going to win the gold medal. I'll tell you that much. Much love as always, guys. Hope you enjoyed, and have a great day.